Hey everyone, welcome back to the channel. I hope you are having a good day. In this video, we will talk about the bank account type in the QuickBooks and the relevant detail types of it as well. So without further delay, let's get started. The bank chart of account type is used to track your accounts that hold cash or cash equivalent assets, such as bank accounts or similar financial accounts. Each subtype under the bank account serves a specific purpose. So we have all the detail types here. Each of them serves a different purpose, and understanding when and how to use them is critical for accurate bookkeeping. So I'll explain the detail types of bank account in the QuickBooks. So first, let's talk about the cash on hand. And the cash on hand account tracks physical cash, coins, or undeposited funds, such as checks or cash received, but you haven't deposited them in your bank accounts yet. So those kind of cash related assets will be entered right here. It represents the liquid assets readily available but not held in a formal bank account. The purpose of this is to record cash registers, petty cash, or funds collected from sales or services that haven't been deposited. It is useful for businesses that handle cash transactions. For example, let's say a retail store keeps $200 in cash register for daily transaction. That will be recorded right here. Similarly, a coffee shop that receives, let's say, $500 in cash tips that haven't been deposited in account yet, that will be added right here as well. And similarly, let's say you have a small business that maintains $100 cash fund for office expenses like coffee or postages, then you will add them right here as well. When you use the cash on hand detail type, make sure that you regularly reconcile the cash on hand to ensure the physical cash matches the recorded amount. Also, make sure to transfer the cash to checking or saving account when you deposit it in your bank. The next is the checking account, and the checking account tracks the funds in a business checking account, which is typically used for day to day transactions such as paying bills, receiving deposits, or writing checks. The purpose of this is to manage the primary operating account for business transactions. It also tracks the inflows like customer payments or deposits, and outflows as well, like the vendor payments, payrolls, or utilities. It also provides a clear record of transaction for reconciliation with bank statements. For example, let's say you have a business and deposit worth of $10,000 for customer invoices into its checking account. Similarly, let's say you have a company that pays you, $2,500 or something for rent, or $100,000 for utility from its checking account. You will record them here. Similarly, let's say a freelancer receives $3,000 direct deposit for service rendered, that will be added here as well. So use this for the main business bank account where most transaction occurs. It is ideal for businesses that needs to pay vendors, employees, or other expenses regularly, and also use it when when you reconcile bank statements, as checking typically have frequent activity. The next option is the money market, and a money market account tracks the funds in a money market account. Money market basically a type of interest bearing account that typically offers higher interest rates than a checking or saving account, but may have limited transaction capabilities. So, if you want to hold funds that earn higher interest while remaining, relatively liquid, then you can use it. It is also often used for short-term savings or emergency fund with limited withdrawals, and it is also suitable for businesses that wants to earn interest on surplus cash without looking it into long-term investment. For example, let's say a business places $50,000 in a money market account to earn interest while keeping the funds accessible, then you can add that amount right here. Similarly, let's say a company uses a money market account to save for a planned equipment which is purchased in 6 months. Then you will add that amount here as well. You can also add a non-profit that keeps reserve funds in a money market right here, and many more examples. Okay, so if you have any deposits related to money market, you can add them right here. Next up, we have the rents held in trust. And the rents held in trust account tracks the funds held on behalf of others, typically in property management or real estate businesses, where rent payments are collected from tenants and held until dispersed to property owners. The purpose of this is to segregate the funds that belongs to clients or property owners, ensuring that they are not, commingled with business funds. It also acts as a liability account as the funds are owed to someone else, and it ensures compliance with the legal and other responsibilities in the property management. So, for example, let's say you have a property management company that collects $5,000 in rent from tenants and holds it in a trust account before distributing it to the property owner. Or let's say you have a real estate firm that holds $2,000 in security deposit for tenants in a trust account that you will add them here as well. So whenever you are managing fund that belongs to others, such as in property management or real estate, you can add them here. It is required for business that must legally separate client funds from operating funds. Okay, so if you have that kind of business, you can use this option right here. And it is also used to track the security deposit or rent payments before they are dispersed. So it's really handy in those cases. Finally, we have the saving account. The saving account, as you know, tracks the funds in a business saving account, which is used to hold cash reserves, earn interest, or save for specific goals. The purpose of this is to store funds not needed for immediate expenses, such as for future investment, taxes, or emergencies. It typically earns interest, though at a lower rate than the money market accounts, and it provides a safe place to park surplus cash while maintaining the accessibility. And finally, you have the trust account. The trust account tracks the fund held in a trust, typically for legal or other purposes, financial related, such as escrow accounts, client retainers, or funds held for specific purpose, like by attorney. The purpose is to maintain the funds that belong to clients or third parties, ensuring that they are not used for business purposes. It also acts as a liability account, as the funds are owed to others, like the client's beneficiaries or escrow parties. It is common in industries like law, real estate, or financial services where the funds are held in trust. For example, let's say a law firm holds $10,000 in a client trust account for a settlement pending distribution that will be added right here. Or let's say a real estate agent keeps $15,000 in an escrow trust account for a house purchase. Or let's say a financial advisor manages $50,000 in a trust account for a client's estate planning. So those kind of things will be added right here. So whenever you are holding funds for a client or third parties under legal or other obligations, you can add them right. It is required for businesses like law firms or real estate agencies that manage the client fund. So you can use this detail type right here. It is also used to track the escrow funds, retainers, or other funds that are held temporary. So make sure to keep the trust funds separate from business funds to comply with legal and ethical standards. So these were the detailed types of the bank account type in QuickBooks Online. I hope you learned something. Thanks for watching.